It's a new month here at Henssler Financial, and we found 3 important things to focus on in the market this month. Number 1, the COVID-19 Omicron variant. A new heavily mutated and more infectious strain of COVID-19, identified as the Omicron variant, is weighing on markets as at the time of this writing, at least 19 U.S. states have now confirmed cases. While much is still to be learned about the new variant, the fear is that this new strain's more than 50 mutations could make it more transmissible and furthermore may reduce the protection provided by vaccines currently available in the market. Despite having more tools to fight the variant than we had at this time last year, including vaccines, boosters, and prevention strategies, market sentiment has soured as some countries have reimposed lockdowns, travel restrictions, and other restrictive policies which have reignited fears of an economic slowdown, which has led to a spike in volatility across global assets. Number 2, Fed policy. Many believe the Federal Reserve was late to announce action reducing the size of its balance sheet, but recent commentary suggests that the monetary policy setting body may now be pressing on the gas to taper its bond buying program a bit faster. In recent comments, the chairman of the Federal Reserve, Jerome Powell, told lawmakers that the central bank was prepared to accelerate the pullback of its easy money policies and even went so far as to say that they could raise interest rates sooner than expected. With the Fed set to conclude its 2-day monetary policy meeting next Wednesday, belief is growing that a formal announcement will follow stating that the Fed will double the pace of its bond purchase taper. Should this more hawkish policy announcement come to fruition, it will mark at least the 4th significant policy change under Chairman Jerome Powell's leadership and could lead to further questioning of the Fed's credibility. Number 3, the debt ceiling. You didn't really think you'd heard the last of it, did you? Despite an October vote by congressional lawmakers to approve a short-term fix, raising the debt ceiling by $480 billion, here we stand again. The good news, however, is that the House of Representatives took a step towards preventing a U.S. debt default with the passage of a bill that would allow the Senate to raise the country's borrowing limit with a simple majority vote. Lawmakers attached a provision to legislation that would prevent automatic Medicare cuts set to take place at the end of the year. The bill will head to the Senate, where it needs 10 Republican votes to pass and go to the president's desk. Treasury Secretary Janet Yellen has estimated the U.S. will hit its debt ceiling on December 15th. That's been your Market Minute for the month of December. Thanks for listening.